PharmD Nation, have you taken advantage of or are you thinking of taking advantage of a backdoor Roth IRA conversion? Now I know many of you are probably familiar with what it is, but in this video I want to explain 3 safety tips you need to be aware of if you're pursuing that type of transaction. So just quickly, a backdoor Roth IRA, again, like many of you probably know, it's where you contribute after-tax dollars into an IRA. You don't take the deduction, and then you take that IRA contribution and you convert it into a Roth IRA. And the reason you do this is if you earn too much money and you legally are not allowed to make a contribution directly into a Roth IRA. So the backdoor Roth is contributed into a regular IRA and then convert that money because there's no income limitations on converting money from an IRA to a Roth. There's only income limitations on making the actual contribution. So that's a simple backdoor Roth IRA explanation, but there are 3 safety tips you're going to want to be aware of. The first one is if you are contributing money to a regular or traditional IRA with after-tax dollars, please report that every single year on Form 8606. It is crucial that you keep track of all your non-deductible contributions into an IRA. Even if you end up converting that money into a Roth IRA, make sure those contributions into the regular IRA are reported every single year on Form 8606. Safety tip number 2 is be aware of the aggregation rule. So the aggregation rule basically limits the tax friendliness of doing a backdoor Roth IRA if you have any IRA money out there to your name already. For example, let's just say you have a $200,000 IRA sitting out there currently. You had it in a 401k, you moved your job, and you rolled that 401k into an IRA and you have 200 grand sitting in it. But now you want to do a $5,500 backdoor Roth conversion. Well, the IRS is going to look at those 2 amounts of money as one. So instead of looking at the IRA as having $200,000 and then doing a conversion of $5,500, they're going to look at that in combination, meaning that they're not going to see the 2 separate transactions. They're going to take your $200,000 and your $500 or your $5,500 and combine it together, which means they're going to see total IRA assets of $205,500. Well, what does that mean and why do you care? Well, when you convert that $5,500 through the backdoor Roth conversion, what becomes taxable is dependent on what percentage of that conversion is converted based off of the total aggregated limit the IRS sees you holding, which is that $205,500. So you take your $5,500 conversion, divide that by your $205,500 total aggregation of IRA dollars that the IRS sees you have, and that percentage that pops out is like 2.68%. Now you take your 2.68% and you multiply that by your $5,500 conversion, which is like $147. That is all that gets converted tax-free. The $5,300 and some change is considered taxable in that year, which basically eliminates the entire reason of doing a backdoor Roth IRA from a tax planning standpoint. So just remember, if you have other IRA assets out there and you're thinking about doing a Roth IRA backdoor conversion or a Roth conversion, a backdoor Roth conversion, know there is an aggregation rule out there that could limit all the benefits of doing something like that. And finally, safety tip number 3 is it's not something I think you have to be worried about because the probability of you running into this is pretty low, but just know that there is a step transaction doctrine in IRS tax code, which means that if the IRS sees that you doing rapid contributions and conversions like most people do into an IRA and then convert it into a Roth IRA, they could see that as you trying to do it within one transaction and skirting the income limits, which means you could be penalized through doing that sort of transaction through the step doctrine or the step transaction doctrine. Again, the probability of them taking advantage of this against you is pretty low, but for safety purposes, I always recommend just leave a little bit of time between the contribution in the IRA and the subsequent conversion to the Roth IRA or the backdoor conversion into the Roth IRA, just so you can avoid that step doctrine the step transaction doctrine, because it is out there and you never know when the IRS is going to try to take advantage of something like that against you or somebody else. And it is a pretty significant penalty. I think it's 6%. So just know that there is that doctrine out there in that leaving a little bit of room from contribution to conversion could help limit the low probability of them taking advantage of that rule against you. So those are 3 great tips if you find yourself taking advantage of, or if you are thinking about taking advantage of, a backdoor Roth conversion.